The Federal Reserve's Open Market Committee met today, and as expected, it decided to keep rates unchanged. But many Fed watchers believe the central bank's statement today signaled it was ready to move because the economy was in good shape. Our next guest, Peter Schiff, the founder and CEO of Euro Pacific Capital, is not one of those people. And given Peter's view, I asked him what the recent weakness on Wall Street tells us about what markets are pricing in ahead of the election. Here's what he had to say.
Well, look, the markets are expensive, and the Fed is still talking about the possibility of future rate hikes. Whether they actually follow through is another story. But a lot of people believe that rate hikes are coming, and it's cheap money that's been the only thing propping up the market. So to the extent that money is less cheap, then you don't have as much propping it up, and it could certainly collapse beneath its own weight. But, you know, the election outcome, I don't think the market's going to like either outcome. Certainly, if Donald Trump wins, and the probability of a Trump victory has increased rather considerably over the last week, I think the markets still look at it as an unlikely possibility, but it's far less unlikely than it was. I think the markets in the short run would not respond well to a Trump victory. But on the other hand, if Clinton wins, I don't think that's a good thing either. I mean, I think long-term, Clinton is even worse than Trump. But in the short run, a Clinton victory has already been discounted in the market to the extent that the markets prefer the status quo. And I still think the status quo is bad. And I think the only thing that is going to put a stop to the stock market decline is going to be the Federal Reserve reassuring the markets that the rate hikes are not coming, or if they're coming, they're at an end, and that we're in fact going to get rate cuts, maybe even negative interest rates, and maybe even most likely another round of quantitative easing. That's the only thing that I think is going to cause the markets to go up. But of course, it'll cause the dollar to tank. And so in real terms, I think there'll still be losses in terms of purchasing power for people invested in U.S. stocks.
Yeah, a Reuters equity market poll last month showed a majority of forecasters predicted that U.S. stocks would perform better under a Clinton presidency than a Trump administration. But what I'm hearing you say is that you don't necessarily believe a victory by Trump would send or should send investors running for cover.
Well, I think the markets will react negatively to a Trump victory because there's more uncertainty surrounding what a Trump presidency would look like. I mean, you say, well, with Clinton, it's the devil you know. But I think in this case, the devil you know is pretty bad. I'd rather take a shot at the one that we don't. But I think the markets will be worried about what it might mean. And I think the markets will sell off. I think gold will rally. I think the dollar will sell off. But longer term, and of course, traders don't think about the long term. They're just trading for what's happening right now. Long term, I think a Clinton presidency is much worse for the U.S. economy and therefore ultimately much worse for the U.S. stock market. But in the short run, we have a bubble. And all people are concerned with now, at least traders, are what is going to happen to keep the air from coming out of that bubble. And nobody really wants to challenge the status quo. They want to continue this cozy relationship between the government, the Fed, and Wall Street. And Hillary Clinton means that they will continue it as long as they can. And a Trump presidency really throws a monkey wrench into that because nobody really knows what it means.
Right. Well, given the uncertainty at hand right now, the question is there a way investors should be positioning themselves in this last week leading up to the election? What should they be doing?
Well, absolutely, because as I said, I think either way, the markets are set up for a decline. I don't know how great the decline would be. I would rather play it from the metal sector. Look at gold. The price of gold is now back above $1,300. We've moved up close to $50 in the last week or so, partially because of the increase in the odds of a Trump victory, but also I think because we're continuing to have weaker economic data that comes out while we have more and more evidence that prices are rising. So the stagflationary scenario is rearing its head in a way that's more obvious to more people. And so that is very bullish for gold. And the dollar is just starting to roll over. It tried once again, I think last week, to get back up near 100. It couldn't do it. Now it's back down with a 97 handle. So the dollar looks very top heavy to me. So I would rather go into the election long gold, short the dollar as my main trades. And, the stock market doesn't seem as interesting a trade to me as currencies and metals.
Well, speaking of stagflation, I heard you mention that, and also speaking of markets, in Forex markets in October, the British pound was the worst performing currency. And now a well-regarded UK think tank is predicting 4% inflation for the UK by late 2017. Pretty alarming. I mean, do you think Brexit could cause stagflation in the UK?
Brexit is not the problem. The EU is the problem. Brexit is part of the solution. The problem is the Bank of England overreacting and panicking, because the Bank of England had been out there warning against Brexit, that it would be terrible for the UK economy. And when Brexit won, the Bank of England believes their own propaganda, and so they decided to slash rates and expand their QE program because they feel that they need to protect the British economy from the ravages of Brexit. But the real problem for the UK is what the Bank of England is doing, not what the voters did. It's lowering rates and doing more quantitative easing. That's what's destroying the pound, and that's what's creating the higher inflation. Had the Bank of England not panicked and made these moves, then the pound probably would have gone up, and they wouldn't be having these problems right now.
Okay, let's come back to the U.S. election, because that's just around the corner. I want to point something out, the fact that according to poll aggregator 538, Clinton's odds of winning have dropped in the wake of the FBI email investigation. It went from somewhere around 80% to somewhere around 70%, and you alluded to that just moments ago. But the point is that she's still projected to win nonetheless. And my question is, because you've come on the show so many times, you've talked about the state of the economy and the dire state you believe it's in. If the economy is really as weak as you say it is, how could she be that far ahead? How could she be the projected winner, really?
Well, we'll see how accurate these polls are. But, you know, the popular vote right now is kind of like a dead heat. I just looked at an ABC poll yesterday that had Trump ahead by a point. He was behind by about a dozen points a week earlier. So it's just the electoral landscape that looks to be tilted in Clinton's favor, and that has to do with the demographics of the various states and where the Democrats have their appeal. So it doesn't necessarily reflect, positively on the economy. It's just the reality of the way we elect presidents in the United States. But certainly, Hillary Clinton is not very popular. I mean, she almost didn't even win the primary against Bernie Sanders. That shows you how discouraged the Democratic electorate is, that they were willing to, vote for an unknown New England socialist versus a very well-known Hillary Clinton, who is very much tied into the Obama administration. And, had some of this WikiLeaks stuff came out during the primary, certainly the transcripts of her Wall Street speeches, she would not even be the nominee right now. It would be Bernie Sanders. And I think the fact that Trump has a shot at winning, despite all the negatives out there about Donald Trump, it's because of how weak the economy is. It's because people are so desperate that they're looking for any kind of change, even if that change involves voting for Donald Trump, who has a lot of baggage on his own, just related to a lot of the other issues that we already know about.